Good day and welcome to Transpek Industry Limited Q1FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vimal Mehta, Managing Director of Transpek Industry Limited. Thank you, and over to you, Mr. Mehta.
Thank you. Good evening, everyone. On behalf of Transpek Industry Limited, I extend a very warm welcome to everyone for joining us on our earnings call today. I am Vimal Mehta, Managing Director of Transpek Industry Limited. Along with me, I have Mr. Pratiksa, CFO, and Mr. Alok Vyas, Company Secretary on the call. Our investor presentation post Q1FY22 results is uploaded on Stock Exchange, and we hope you had a chance to look into it. We will give you a quick overview about the company, followed by recent developments. The company was founded in 1965 as Transpek Industry Private Limited by Sri Govindji Shroff. Currently, Mr. Ashwin Shroff is the chairman of the company. Since 1970, we have emerged as one of the most reliable chemical companies in the global market. We have established indigenously designed procedures for chlorinated compounds such as thionyl chloride, different acid chlorides, and various alkyl chlorides. Throughout the years, we have gained competence in manufacturing and managing chlorine and sulfur-based chemicals. Chlorination chemistry is used in intermediate and specialty compounds that can be used in a variety of applications. Chlorine and sulfur are hazardous chemicals, and what sets us apart from the competition is our capacity to handle such chemicals in very huge quantities. In terms of our product portfolio applications, our products are used in a variety of industries such as polymers, pharmaceuticals, agrochemicals, fragrances, and a variety of other applications such as paints, pigments, in making photoinitiators, and other similar applications. Polymer is one of the most important applications. Certain monomers are manufactured by us and our customers purchase them from us. They also purchase other monomers from other parties, and which they combine and use to create polymers. These polymers are often high strength, high durability, lightweight, and fire resistant materials. Because of these features, they are frequently used to replace steel or other metals, as well as in a variety of other applications requiring high strength, such as aerospace and defense industry. Our products are also used in pharmaceutical industry for making supplements like vitamins, making cold treatment medicines, cholesterol lowering medicines, and so on. Some of our products are also utilized in production of agrochemicals such as pesticides, herbicides, and insecticides. A small percentage of our products are also used in flavor, aroma, color, and pigment markets. We have a manufacturing facility in Ekalbara, Gujarat, near Vadodara, which is an advantageous location for a variety of reasons. Export connectivity is one factor, and the qualified manpower is another. We have multi-purpose and multi-product plant facilities. The entire complex covers 100 acres with around 55% of this being green belt. On the site, we have about 30 to 35,000 fully grown trees. The entire production capacity, which includes captive consumption of some products, is estimated to be at 66,000 metric tons. Our staff constantly innovates, monitors, inspects, and handles the numerous complex chemistry that we have at various stages. We have our in-house R&D center that is recognized by the Department of Science and Technology of Government of India. Besides this, Transpek has job work arrangements with 3 manufacturers. And to clarify, these are not leased or rented facilities. They do job work for us. We manufacture more than 15 products in total. Transporting some of these hazardous chemicals is a critical part of our business, and we have a well-developed transportation and logistics infrastructure that comprises hundreds of ISO tanks. With respect to quality, delivery and service, we have established a very, very strong reputation with the world's major chemical giants. Now coming to recent business performance. Due to COVID-19 in financial year 2021, business environment was sluggish in terms of the applications that our customers have, resulting in lower offtake in volumes. We have seen some business revival in last 2 quarters. It is expected that the situation will continue to improve. We are well prepared to capitalize on future growth opportunities. Over the last 2 quarters, business performance has seen a significant improvement. In comparison to Q4 financial year 2021 and Q1 financial year 2021, revenues in Q1 financial year 2022 were higher. The application volumes are gradually recovering, providing opportunity for the company to increase its revenue. Regarding the existing long-term agreement, I would like to inform you that the terms of agreement have not changed due to pandemic. Earlier, total volumes were low because the application segments were not doing well. We have already been given compensation for the small shortfall in offtake by the customer during the financial year 2021. The business has been recovering and has reached to good volume in Q1 financial year 2022. The company believes that situation will further improve in terms of volume growth. Now, this time we received some questions from investors, and some of these questions we believe are of generic nature. So many of you may be wanting to ask similar questions, so we will try to address some of these questions as part of this speech. And in fact, we would request all investors if they can send questions in advance as much as they can. That would help us and you both in terms of covering it during the initial talk, and then we can focus on questions which are beyond that. So coming to the new project, as we have also mentioned in our presentation uploaded recently, it is still on hold due to prevailing uncertainty, and we are reviewing the situation and would announce if there is any significant change in the status. On the capex for the coming period, it will be based on timing of the introduction of new products or any other initiative. And if there is any significant investment that is to be done, it will be announced appropriately on the stock exchange. On the other long-term contracts than what we have today, we are already working on medium and long-term contract with other customers. A 3-year contract is under finalization with an existing customer. However, it will not change anything significantly in terms of volumes from this customer compared to what has been in the past. It is just entering into a contract for the same level of volumes. On material sourcing and transportation, I would like to inform that company has not faced any major issues in raw material sourcing during this COVID situation. In case of transportation and logistics, there have been delays in getting berths on vessels and delay in return of our ISO tanks. This is experienced by many other companies, as you might be knowing. Also, freight charges have increased as witnessed by the industry. However, the company has been able to manage all this quite well and no significant effect is seen. On de-risking, as mentioned in earlier calls and also in the presentation that we have uploaded, de-risking is our primary focus in terms of performance and strategy. Company is focusing on reducing customer concentration, product concentration, and regional concentration. We have already started adding new products, and customers are also working to change the regional concentration. Coming to new products, company has introduced 3 new products in last 6 months. While the initial volumes are small, they are expected to grow over next few years. These products have applications in agrochemicals and pharmaceuticals. We intend to grow our products with diverse application profiles So there's pharma, agro, polymers, plastics, photoinitials, electronics, and personal care. All other new products are at different stages of development and shall be introduced after the completion of development and validation by the customers. Some of you have been asking about competitive landscape. So on competition, I would like to just say that there are few companies making acid chloride in India, Japan, China, and Europe. It should be noted that there is no like-to-like, one-to-one competition, as each company may have some common products with us, but they may also be making other acid chloride as well as other products. So just to give you an idea about a few major competitors, but yes, of course, it must be noted that they may not be currently directly competing in case of some of our customers and some of our products, but they are competitors in general or broader sense of them. So one company is CAB in Europe. Second is Ihara in Japan. Third is Shiva Pharma in India. Fourth, there are few Chinese manufacturers. And five, some new manufacturers in India, they have started creating some acid chloride capabilities. But out of this, the old ones, they have some locational advantage like CAB in Europe, and some have long-term standing in the market. So this is, we have tried to cover some of the questions, generic questions that we had received. And thank you for listening to my talk. Now I would like to hand over the call to moderator to open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. And congratulations on good set of numbers for the quarter. Sir, couple of
Rahul
questions.
Jain, may I request you to unmute your line from your side and go ahead with the question, please?
Am I audible? Hello? Am I audible now?
Yes.
Sir, just to understand with regards to the capex, you have been maintaining the capex has been put on hold considering the decline in our long-term agreement business, the polymer business. But just to understand this further, where do we stand today in terms of, pursuing the next growth capex? What could be, the trigger for going ahead? And typically, what kind of readiness do we have till date? Like, do we have ready land available within our company for going for the new capex? Are the EC approvals have been applied? Just to understand, when you announce the capex, it will take how much time for that capex to really fructify into the top line? That is my question number one.
Okay. So, I think there is some confusion here. CAPEX in general and new project, these were two different things, and this new project was entirely an overall part of an overall growth plan. It had nothing to do with the long-term agreement or anything like that. It was just another location, another place, and we wanted to set up a new project to capture some of the growth that was seen at that point in time. So this is one part, and which as we have been mentioning that it has been put on hold because we do not have any clear visibility on that part of the business. Now coming to CAPEX in a normal sense of the word, or in a regular process, as we have mentioned that CAPEX is already on the card. So as soon as we have some significant development in terms of new products, which is a kind of a critical mass in terms of volume, we would be doing whatever CAPEX is necessary. And in fact, we have been conserving cash for that also in terms of our cash flow and other aspects. Now coming to availability of land and availability of permissions and all that. So there are variety of ways this can be handled. One is that we have ample land, more than what we write. I mean, more than as I have mentioned in my initial speech, more than 55% is green belt, and a lot of that is open land. So land is not an issue. When it is coming to permissions are a very complex matter of. It's a very complex matter, but we can get permissions depending on what we are planning to achieve. There are methodologies which is called product mix change and various other aspects. This is second. And third, as I mentioned, that we have 3 job work arrangements, and those companies also have land as well as additional permissions which we can utilize. So what we are working on is that we are working on new products, and as and when significant development happens in terms of a critical mass where we need to invest in CapEx, we will definitely do it and announce it in advance.
Just to understand this further, we have met in your AGM about 2-3 years back. We attended 2-3 AGMs on a consistent basis. And correct me if I'm wrong, if you're talking about this land in Gujarat, the available space, but typically permissions in Gujarat were supposed to be quite difficult or almost impossible to come forth, as what you had mentioned in one of the AGMs. So that time you have mentioned that you will try some other.
There are issues, but now things are slowly changing, and we believe that government is conducive to give permissions. And as I mentioned that, you can go for example, what is called product mix change. So what is product mix change? That if you are manufacturing 10 products, but you are not manufacturing 5 products right now as part of your original consent and EC, then you can convert those 5 products to the new products that you are manufacturing. That is why we are able to introduce new products. As I mentioned, in last 6-7 months, we have introduced 3 new products. And there is adequate amount of available permissions which are already there, which we have to convert to new products between us and the job work facilities.
Sure. And so just to understand, you have maintained, we have seen good improvement in our top line for last 2 quarters. And you have mentioned in your presentation as well as your initial speech about good recovery in the volumes. If you could share some numbers with regards to the long-term agreement, typically as we speak today, are the volumes back to almost, as we speak today, are the volumes somewhere near to the pre-COVID levels now, or we are still far away from those volumes?
No. I would not say that we are far away from the optimum volumes. We are reaching there, and we believe that volumes are going to be sustained as they are, and probably improve also.
Thank you very much. Rahul, I'll request you to come back in the question queue for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Hello. Yes. So when we add new products to our portfolio, typically once they how long do they take to mature in terms of getting a sizable volume, and what sort of revenue would they be adding over time? And second question would be your share of revenue from new products. How has it moved over the past 3 years, and how do you see it going forward?
So, to answer your first question, typically, as I have mentioned earlier also in the various calls, that typically when you start, say for example, it of course depends from industry to industry. So let us start with first, say pharma. Today, for example, we have introduced one product for pharma. That product is right now being bought in small quantities by our customers. Of course, the commercial purchase, not R&D or any other type of commercial purchase, but small quantities. And they are developing or they are manufacturing their own products out of that and gradually building their market, because there are patent issues and other issues that they have to address. So Typically, in such a case, we see about 1.5 to 2 years before such a product gains critical mass. Now, coming to, for example, product which goes into polymers, as an example, then polymers also they require huge amount of testing and validation. So again, 1.5 to 2 years before we actually see a critical mass in terms of volume. So three products that we have introduced, I think probably in another 1.5 years time we will start to see some critical volumes coming out on that. And typically, each product can provide about 10 to 12 crores of worth of sales. Unless it is something which is very significant, then probably it can go to about 20 crores or something like that.
Once it matures.
Yes, at the time when they mature.
Okay. And sir, our focus would be more on pharma, agro, and polymer, or how would be in terms of our introduction of new products, like in terms of the end market opportunity, given certain like an agrochemical will be restricted to the end market size of that particular insecticide or a fungicide being used. Same with pharma. While in polymer it could be similar to the end product market size. So how does it differ, and how do we select a product which we want to get into?
So there are two ways to look at the product selection. One is that we have what we call a new business development process, where we study different products in terms of market, in terms of chemistry, and matching it with our current or potential capabilities, and then we decide on a particular product. This is one way. Second is that we get inquiries from different customers, existing and new, and then we look at those products and we decide whether to go for those products or not, whether they are within the circle of competence that we have or not. So this is the way the products are selected, and then of course the development phase and everything happens.
Okay. And sir, any risk to our the chemistries which we are into and the products where those chemistries are applied, in terms of them getting cannibalized with some other chemistry which is more efficacy or more any other reason? So any such risk? No.
Because chlorination is a very, very vast field, and it is one of the 4 or 5 basic chemistries. Chlorination is one of that. So it's a big landscape of products. We are into acid chloride, but when we look at chlorination chemistry, there are many other possibilities. So that's not something that can happen.
Thank you. So to interrupt you, sir, I'll request you to come back in the question queue for a follow-up question. I request all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Sarth Reddy from Unifi Capital. Please go ahead.
So they say necessity is the mother of invention. Is it fair to say that the crisis, or maybe I'm using a strong word, but a significant contraction that we've experienced over the post-COVID phase from our largest customer, it has led to management to rethink about risk, and you all have worked hard, maybe extra hard, to come up with new products that have in part compensated, and we can see that the diversification of profile of products that the company sells seems to have changed or improved. Would it be fair for us to understand, without getting into the nitty-gritties of which product, it's just hard to get into that, would it be fair for us to understand as shareholders that the new Transpek in FY20, maybe let's say FY23, when your pre-COVID volumes from your contract, which was the bulk of your business from what I understand, when that is back to normal, you will stand much taller in revenues, given the new products that you all have been able to come up with to compensate for the loss of business? Am I clear? I'm not sure if I was able to.
No, I understood what you are trying to ask. Let me first of all give you a very clear understanding that the contract volumes are picking up, as I mentioned, and we believe that they are going to be stabilized to the optimum level soon. So from that front, we do not see currently any issue. Now, let me just give you a little bit more detail because some of you others also may have the same question. What happened is that it is not that fundamentally the business model of our customer changed due to Corona. Nothing at all. What happened was that the applications that they have, especially in certain segments, those were the businesses that were hit by Corona, and therefore their demand from their customers reduced. But this was a temporary phase because the product that the manufacturer has multiple applications beyond the industry which suffered to some extent during this COVID situation. So what they have also done as part of their own strategy, they have also raised their proportion of their business into various other applications. So there are so many applications of those products. It is in defense, it is in aerospace, it is in automotive, it is in construction, it is in firefighting, so many other, and there are also other, and they keep on developing new applications. So now they have already built their volumes, rather regained their volumes to a great extent, and they believe that there is not going to be any significant change, even if there is a third wave or anything like that happens. This is one part. Now, another bit that I would like to add is that, everybody has a question that the volumes reduced in last year, but let us look at the 2 years consistently before that. The Transpek of today is because of that long-term contract which significantly changed the level, almost close to double than what we were in 2017 and those times. So what happened with this contract is that we created a financial stability, and the most important element was that we could build resilience within the organization, within the company, within the business, which helped us, despite significant drop in volumes in the last year, which helped us sustain and make profits even during those bad times. So let us understand that this particular contract has been a significant contributor to the value that everybody, all stakeholders have derived from this business. This is one. Moving forward, as we have been continuously telling that as a very conscious strategic approach, we are trying to balance out our application profile. So we are not talking about specific products, we are talking about application profile. So right now our concentration is significantly in polymers. That may change as you would probably see it's changing slowly. Also it is changing in terms of regional concentration. Right now we are very heavily on US centric. So that is also changing. We have shifted some in terms of percentage or proportion. We are now also having Europe as a significant portion of our volumes, as you could have seen in the presentation that we uploaded. So that strategic shift is also happening, but that is not because there are severe or other. There is some serious doubt about the volumes that may be coming from the contract. It is a conscious strategic de-risking or rather de-risking strategy that we are following.
Yeah, so thank you for that. Then that's coming across quite clearly in the first page of your presentation, the more diverse nature geographically and at a product level. But that my question also was, isn't it logical then that when normalcy returns from the contract which was leading to certain applications in defense aerospace, for example,
as I mentioned that we are already, I mentioned I think a couple of times in earlier question also, that we are expecting the volumes to reach optimum level as they were in near future, very soon. That's what I mentioned already.
Yeah, no, let me complete my question. You didn't hear my question. My question was, if those volumes return as they are, as you said, they already virtually are, and you are already at full utilization of capacity, then would there not be a pressing need to expand capacity? Because while those volumes contracted, you added multiple other products to de-risk. So now you have your erstwhile volumes from your erstwhile product as well as all the other new products which have scaled up.
Yeah, that is very logical. No, as and when required, there will be addition of capacities as per the need of the products and the quantities that are being manufactured. As I mentioned, that right now whatever products that we have introduced are in small volume, so that can be produced within the multi-purpose and multi-product plants that we have. As soon as the volumes go up to a critical mass, definitely there will be an investment, there will be capex, and there will be new capacities.
Right, and you feel you are adequately positioned for the near future in terms of capacities, or do you see a tight situation already?
Sorry?
Do you see adequate capacities for the rest of this financial year, or do you see that?
We have adequate capacity for the time being, yes. For this year, no problem at all.
No problem. Thank you.
Thank you. The next question is from the line of Viraj Mehta from Equirus Portfolio Management Service. Please go ahead.
Yeah, hello sir, and thanks for taking my question. Sir, just have a simple question. Once we have this new product scaling up and our earlier contract also reaching its optimal takeoff that we had earlier, we were probably doing around 180-190 crore top line per quarter before the pandemic hit. Is it safe to assume that we'll be 20-30% higher than that because of new products and the earlier product reaching its optimal utilization? Not today, but I think whenever we kind of reach that point in future.
See, you have calculated numbers for me, but point is that there is no crystal ball which we can forecast specific numbers. But yes, as the volume grows and as quarter on quarter growth happens, then naturally we will see where we are reaching. But right now, as I said, that we should be reaching the optimum volumes that we have seen earlier. I would not speak any number here because a lot of things depend on the price at that point in time. It also depends on the product mix that we have in that particular quarter. And if you have studied the company's financials, you would have probably seen that quarter to quarter there can be significant variation depending on product mix, product price. So it is not that simple to talk about numbers in that manner. But yes, we are going to see good level of volumes in this period and the future. Of course, barring any unforeseen circumstances which neither of us can predict. But otherwise, in general, what we believe is that we are going to reach to whatever was the optimum levels earlier. And for the new product, as I said, maybe after probably we may be talking about similar thing in the next year's call, and at that time probably we can tell you where we are heading in terms of volumes and all that.
Right. Sir, last question it was okay. Within our capacity, and you said that our job workers also have some capacity.
Yes.
What is the top line we can do before the capex? Not asking a year, but what is the optimal top line we can do?
Yeah, that can go up to about 700 crores. 700, even depending on the product mix, can go up to about 750 crores annually.
Got it. Thank you and best of luck.
Thank you.
Thank you. Next question is from the line of Dhruv from Monarch AIF. Please go ahead.
Yeah, good afternoon, sir, and congratulations on getting back the business on the on a good track. Sir, my question is regarding the capacity utilization that we did for FY21. So if I'm not wrong, we have an installed capacity of 18,000 tons and our job work capacity is 8,000 tons, correct? So out of that, what was our utilization for FY21, the actual volumes which we sold last year?
So one moment, I'll have to pull out some data.
Yeah.
Can you hear us?
Hello?
Yes.
So the last year we had roughly about 50-51% capacity utilization.
Okay, and this is on total 26,000 tons installed, correct?
Yes. Actually, see the capacity that 26,000, that is that a number that you have got from somewhere, or where that number has come?
No. So in the previous calls, you had only told us that you.
No, I just wanted to make sure that what we have, because there are other products beyond the contract, other long-term contract products which are included here. So yeah, about 50% of that total, 18 plus 6 years. 18 plus 8.
Okay, and sir, what would be your capacity utilization for the first quarter of FY22?
FY22 we had, I can do it differently, because FY22 we had this corona second wave and 1 month was here and there, but right now I can tell you that we are operating at about 85% to 90% capacity, barring 2 small capacity plants which has campaign based products, so right now they are not being utilized, but about 85% capacity is right now being utilized.
Okay. Right. And sir, also you mentioned
just to again repeat this, that simple mathematics would not apply that if you are doing this much capacity, this was the turnover, because as I mentioned, there are product mix changes, there are price changes from quarter to quarter, so just keep this in mind.
Okay. Sure, sir. I take the point. And also, you mentioned in your opening comments that the client had compensated you for the low offtake in FY21 in terms of the long-term agreement. So, would it be possible for you to mention the quantum of that compensation?
No, it would not be, because the contract has confidentiality agreement, but I can give you the answer in a little different manner.
Okay.
The gap between what is the minimum contracted volume and the actual volume was not very significant. That I can tell you. So the compensation was also not that significant, which warranted a specific or separate disclosure.
Right. And then one last qualitative answer, if you can give. I don't want numbers. So as you have already said that the long-term agreement business modalities has not changed due to COVID. So what I wanted to understand is that previously the products which you were supplying to the client in the long-term agreement, has the realization for the product dropped post-COVID, or is it the same pre-COVID?
No. There is no change in the realization, because it's a cost plus formula-driven contract. So the margins remain consistent.
Okay. That's great. Thank you so much. I'll come back in a second.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa Company. Please go ahead.
Yeah. So generally we have almost like a fixed cost of almost 100 crores between salaries and depreciation and interest and return on investment. So we could utilize almost only 50% of capacity in 2021. So is not the compensation really too low for us, given that we have almost suffered losses of between 45-50 crores on fixed cost alone? So that's one.
And especially because, the same buyer sources its material from another supplier in India at almost much higher rates. So, we should have been compensated much better, I think. And secondly, how do you feel that, their final product, Kevlar, will be utilized for electric batteries? Are they giving any kind of indications on, where it should go? And, that could be a much bigger utilization of their product. And third is that, can you give an estimate as to how much is the 3 job workers, contributing to us revenue-wise each quarter? And how fast could we get, any kind of permissions for expanding capacity at the present Ekalbara complex?
So, to answer your first question, compensation is based on not the maximum volume that the customer typically takes. It is based on the minimum guaranteed volume. So, the gap between minimum guaranteed volume and the actual volume, as I mentioned earlier, was not very significant. So, therefore, naturally, the compensation would also not be significant. The volumes that you saw, for example, in 2019-20 or 2018-19, they were optimum level volumes. They were not minimum level volumes. So that is one point. Second, coming to your second question, electric vehicles. Now, you see, Kevlar or any other aramid fiber, whatever companies are manufacturing, they are quite expensive products. So at least we do not personally, or rather we do not as company, we do not think that aramid fiber would be used much in electric cars. Of course, it can give lightweight compared to using metal and all that, but we don't see any major hints or anything coming from the market or from customers that it is going to be used in electric vehicles. Probably they may use in very high-end electrical vehicles to some extent. But we will come to know.
Actually, there are articles in the press stating that your said customer is in talks with a Japanese battery manufacturer to use it as a separator for batteries.
That can be there because that's a mission critical application. That can be there, but not in general in electrical vehicle like for the body or something like that. That would not be used. But yes, it's a very specific application. But it will not be significant in terms of the content that goes in each car. So coming to your question on the permissions, in Ekalbara, supposing we go today for what is called product mix change, it takes about 4 to 5 months to get a permission. That applies to all including job workers and all that. It's about maybe 3 months, maybe 4 months, maximum 5 months process.
So now we are, actually we may not be now looking at a greenfield expansion at all. So how will we be, utilizing our excess cash flow, or how do we propose to, really utilize it? And secondly, is the company doing anything to list its shares on NSE or to improve the liquidity of the stock, because our equity is very low and even the float is quite low. So are we thinking in terms of doing anything to enhance the shareholder value there?
So cash, as I mentioned, that whatever cash flow we are generating, we are right now conserving for any major developments that may come. Of course, besides whatever is logical or whatever is found fit by board to be distributed to shareholders in form of dividends and all that. Others are used as retained earnings, which is basically being conserved for the future initiatives. What was another question? So NSE listing is again a board subject. So we will definitely pass on to the board and your recommendation for NSE listing.
Thank you very much. I'll request you to come back in the question queue. Requesting a participant to restrict to 2 questions per participant. Next time, Thomas, please come back in the question queue. The next participant is Nikhil Shetty from BP Equities. Please go ahead.
Thanks for the opportunity and congrats on a good set of numbers. So most of my questions already been answered, but on the gross margin during the Q1, it is contracted by around 900 bips on a YY basis. So what led to this decline? And can you share the sustainable gross margin level for FY22 and 23?
I think you had sent this question, right?
Yeah.
Yeah, but we try to figure out what you mean by this, and we did not see, when we look at our gross margins, we don't see any contraction like 900 BPS on year-on basis. So I don't know which data you have used to ask this question.
So last year it was around 56.4, and during Q1 it is around 47.4.
Just one moment. You are talking about percentage, right?
Yeah, I mean, I'm talking about it's nearly 9% drop in the gross margin.
No. Say that again. Which one you just referred?
Last year, in Q1 FY21 versus Q1 FY22.
22.
No problem, sir.
One moment.
Participants, please stay connected. Line for the management got disconnected. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Mr. Mehta, you may go ahead.
Okay, understood what you are talking about. Some of the raw material cost that has increased during the current quarter, that's why you are seeing drop in gross margin.
Okay, so can you share the sustainable gross margin for 22 and 23, sir?
I can tell you about EBITDA. It should be around between 16 to 20% of the sales. That I can reasonably estimate. Which what of course we use for our internal targets and all that.
Okay. So my next question is on some local manufacturers are aggressively adding acid chloride capacity where we compete with a similar product and primarily targeting to the export market like terephthalate chloride and isoteral chloride. So do you expect this affect our overall pricing?
Yes. See, the point is that some local manufacturers are definitely adding capacity. That is, your information is absolutely correct. But how it will impact pricing is basically it's all totally dependent on demand and supply, and of course the preference of the customer for a particular supplier. For example, Transpek is a very preferred customer for most preferred supplier for most of our customers. One moment, there is some noise in the background, big noise. Sorry. So pricing may come under pressure if there are more suppliers and demand is not picking up accordingly. So definitely pricing will come under pressure. But right now, whatever capacities that others have generated, they are already in market. Some of them are already in market, and it has not affected pricing very significantly.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, thank you for taking my question, sir. This was again related to raw material cost increase. You said that the long-term contract is cost plus margin. So is there any lag between the cost increase and passing it on to your large customer?
Yes, you are right. So the simple process is that whatever is the average cost of the raw material in, say for example, current quarter, will be adjusted in the price in the next quarter. So there is a 1 quarter lag.
Okay. So whatever the cost has increased, we'll be getting the benefit in the next quarter for that.
Yes.
And the employee cost has increased a bit in this quarter. So is this sustainable now running trend for the current year?
Sorry?
The employee cost which has increased in this quarter to somewhere around 13 crore. Employee. Yeah. So is this going to continue the same level, or this is one-time increase which has been given in this quarter?
So this is what if you are comparing quarter-on-quarter basis, then there is this increase is normal increase that we see in industry, whatever is the normal increase that.
Okay.
And probably you are also comparing March 31 quarter with the June 30 quarter, and that is where there is one small adjustment in March, which is gratuity which was provided for earlier at larger amount was reversed based on the actual valuation.
Okay. Fine. So this is what going to continue in the coming period as well. And so last question relating to the share of polymer. The share of polymer, if you see, this is mainly to the key customer, or you may be supplying it to different customers also?
Yes, this product which goes into polymers is supplied to different customers. Supplied to customers in US, supplied to, and also in US multiple customers. It is also supplied to other customers like in Korea, like in Japan.
Okay. Great, sir. Thank you very much.
Thank you.
Thank you. Next question is from the line of Sunil Kothari from Unique Portfolio Management Service. Please go ahead.
Thanks for the opportunity. Congratulations, Bimal, for sustaining improvement in numbers and profitability.
Thank you, Sunil. Thank you.
Sir, my question is, compared to last this pre-COVID situation, the way people were talking about India becoming opportunity for sourcing from India, China plus one strategy, and after COVID also there was a major supply disruption globally. So are you getting any inquiry or thoughts, any major opportunity opening up for Transpek because of this last 3-4 years disruption related to China and COVID. Your thoughts or your views?
Yes. So there are two ways to look at this. One is that whether Transpek has been in direct competition with Chinese suppliers of the products. So we are in direct competition with Chinese suppliers in some of the products, not all of our products. In fact, in some of our products, we are exporters to Chinese customers. So that's why we are not getting many inquiries currently from our customers, because we were not being considered a substitute for Chinese suppliers today or earlier. So this is one way to look at it. Now, looking from a macro level, on a larger perspective, yes, we are getting inquiries from various customers, and whom we understand to be looking at us, and of course other suppliers from India as a replacement for China. But the point is that it's a very gradual process, because as I have been mentioning and explaining time and again, that changing supplier A to supplier B, especially for example in pharma or mission critical applications like polymer, is not that easy, and it takes some time. But yes, there is definitely a potential in terms of some opportunities.
Right, sir. And sir, my second question is on the de-risking strategy. The statement we are making is that we want to balance volume distribution among 4 to 5 application segments. Basically, we are currently very heavy, almost 2/3 from polymer, and we want to balance it maybe over a 3, 5, 7 year whatever time frame. So I'm very sure that we are not going to reduce our polymer related contribution, but we want to increase further this other applications. So what preparation are we making? And it will require definitely a very sizable investment also. So without any time frame, if you can talk about the opportunity, the other segments which you are working since long on pharma and agro related products. So a little bit more on qualitatively on this aspect of de-risking.
So to answer your question in the first part, which is that we are definitely not going to reduce polymers contribution. In fact, we may be looking at even adding more products which go into polymers, parallel to adding products which go into various other applications.
Correct.
So two major areas of applications that we are working on is, one is of course pharma, and another one is specialty chemicals. So specialty chemicals, because of its very vast potential in terms of application areas. When we say specialty chemicals, it's not just one particular area. It can be, hundreds of applications. So we have already built down a list of potential products that we can manufacture as part of our market intelligence process, as well as through interaction with customers. So some of the specialty chemicals we are working on, and yes, as you rightly said, as and when the maturity of the process happens, and when we are ready to introduce some of these products, there will be some requirement for significant investment. And at that time, of course, we will announce that appropriately.
Okay. And sir, last view or point to convey is basically as an investor, people understand that Transpek being so successful since long with world's best the topmost MNCs, your track record is too good. The recently concluded this long-term agreement, product and contract is also you are successfully delivering. So what is stopping us to become little aggressive? Please, don't misunderstand, we are asking for very high growth and numbers, but with looking at your already established setup, your experience, the way we have proven ourselves, what is stopping us from little bit becoming a more capex heavy and trying to do some more growth? If broadly you can talk your views.
In fact, you answered the question in the question that you mentioned, that you see the very reason that we have grown so fast in last 3 years is that we were very, very aggressive compared to our earlier years.
Yes.
in terms of investment. We invested heavily, significantly into just one project, which was probably, equal to 5 or 6 years of capex, general capex that we do.
True.
So that way, that strategic approach of being aggressive is definitely continuing, and we are, as I said, we are working on some of the initiatives. The only point is that we believe in, kind of a process where we also ensure that we remain stable and we also remain resilient, because we are in VUCA world. Things can suddenly change. And we never believed that this kind of situation will arise, but last 2 years we all have seen that how things can go from good to worst. So that's why whatever we do, we are definitely aggressive in that sense, but we are building our base before we take next quantum jump.
Thank you. We move on to the next participant. The next question is from the line of Rahul from Shefa Family Office. Please go ahead.
Yeah, so my question is extension to the last answer. You getting into new application segments and planning to grow little aggressive. Sir, can you elaborate other application profile like electronics, personal care portfolio, photo initiator which you are planning to get into? Is it like it's our capabilities in those applications, or those are our natural extensions in terms of product portfolio and value chain? What will lead us to getting interested into these areas? Is it like demand from the client, existing client, or the opportunity size we can tap based on our capabilities? Please elaborate on that.
So it is actually a mix of all that you say. Some products that we work on is basically coming from customers, existing and also the new customers, potential customers. So those products, of course, we evaluate, and if we find that they fit within our circle of competence, then only we confirm to customers that we are ready to work on it. This is one part. Second part is that we work on what we have built so far. So whatever our capabilities are in terms of processes, in terms of chemistry, in terms of the products that we manufacture, in terms of the developments that we have so far done and we are doing, we utilize that, and based on that we also, of course, utilize market information that this product may be, say, for example, import substitution as an example, that it may be heavily imported from somewhere and India needs it. Can we manufacture this product? So that can be one element of it. And application profile is basically, for example, let us talk about photo initiators. So photo initiators have a lot of application in what we call surface coating. And new developments keep on coming. It's not only one product. Products keep on developing in that. So we look at the possibilities in terms of whether we can participate in that kind of development. And then if our chemistry or our process capabilities fit within that, then we work on that product. So it's a very, very structured process, a very refined process, refined over the years. And we follow a very, very systematic procedure for that.
I understand, sir. So how we are approaching towards it? Like some R&D we are doing, how many PhDs we have onboarded, or kind of scientists, or in terms of validation, process validation, product development?
Yes. So we have a full-fledged R&D laboratory manned by probably, I think, if I remember correctly, about 20 plus chemists. People who have a chemical background of different types and different experience levels. And we also have a team of engineers who are working together with chemists in order to move from R&D level to kilo level, and kilo level to pilot, and pilot level to the commercial production level. So those teams are also in place. And as and when, of course, we need to draw on some talent from outside, then we go to universities or institutions and we draw the talent from there.
I appreciate, sir. So largely margin profile will...
I'll request
no problem. I will be in queue. Sure. Thank you.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, as you mentioned earlier that we are already around 85% of the utilization, and you also mentioned that we are working on few products that are small in size right now, but as and when they attain a scale, then we can, do a capex for that. So I just want to understand, for this capex, if you decide to do a capex or for any of such products, so what would be the amount that typically will be required for this kind of a capex, and how much time typically it takes to, do the capex?
The point is that it is not a simple calculation that for product A, this much money will be required, product B, this much money will be required, because product to product, it varies. So sometimes, for example, it can be 7-8 crores, it can be 10 crores, or it can be even 20 crores or 30 crores also. So it's very difficult to say for a particular product as of now that this kind of effects will be required, because it also depends on how the volumes unfold and how we refine our process as we start to produce these little larger quantities. So right now what we are doing is that we are using our existing facilities with some adjustments and some modifications to manufacture these products. And as soon as there is a little indication that volumes are going to go up, then our engineering team will start designing this facilities, and based on that capex data would be, or other capex value would be derived.
Okay, and so broadly, if you can give us what kind of asset turnover, can this products achieve? So for every, say, 20 crore, 30 crore rupee that we invest, how much kind of a turnover broadly we can expect to achieve?
Typically in chemical industry, sometimes it is 1.5 times, sometimes it is 2 times, and in some cases it can be even sometimes 2.5 to 3 times. But some products, in case of some products, not all products, but some maybe 10% or 15% of products, it can be even 4 to 5 times. But very few products, yes.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Ankit from Bamboo Capital Partners. Please go ahead.
Thanks for the opportunity, sir. Sir, with this, the long-term contract coming back to streamline and we going back to our pre-COVID levels, as you were saying, we can touch 160, 170 crore of quarterly run rate. So, with this 3 new products also ramping up, let's say over the next year or two, we can touch 700, 750 crore of top line. So, what will be the growth driver from there on? How do we see the company scaling up to, let's say, 1,000 to 100 crore over the next few years? I'm not asking for a timing, but do you think we have certain projects in pipeline or molecules in pipeline to be able to reach that? And if we do have, where will we get the additional capacity to ramp up to these levels?
So, these are definitely part of our strategic approach. So, for example, we keep on working at what next level that we want to reach or we should be reaching, and then within that we define some of the areas of growth, we define some of the potentials that we look at, some opportunities that we look at. So yes, every company, every organization and the management will have aspirations to go to the next level from where they have reached so far or they are expecting to reach in 1 or 2 years. So we do have some of these plans, and there is, as I mentioned earlier, there is a very structured process of building those strategic pathways where, board level, promoter level, management level discussions happen, and then we decide on, okay, this is the area that we want to work on. For example, just to give you an example, this polymer business, we had envisaged when it was just, very few crores. We had envisaged, I think in around 2007, that this can become a much, much, much larger business than what we are seeing today. And from that time, we started working on these products which go into polymers. So yes, we do have a kind of strategic horizon as we move forward. Right now, of course, as you rightly mentioned, that I cannot give you very specific time or specific numbers, but yes, the numbers, for example, that you mentioned are definitely part of thinking process.
So do we have certain products under development in R&D or in our pipeline to be launched where the size of the molecule can be pretty large, let's say not the current 10-20 crore per molecule that we are doing, which those single molecule itself can be like 50-100 crores, even more?
Yes. So basically, what we have is that if you ask me today, we have library of about 150 products ready. Ready in the sense with data, not ready in terms of development or R&D or anything. So there is definitely a pipeline, but selection of the products from this pipeline depends on how the market is, how the business is. So we use, as I mentioned earlier, we use market intelligence, market data. We also interact with customers, and then on the basis of that, we select the products and we start developing and we start working on it. But if you look at in terms of knowing or understanding the product and broad idea about the potential and broad idea about chemistry and all that, we have a huge pipeline that is there.
Thank you. We move on to the next participant. The next question is from the line of Kashyap Karthik from Table Tree Capital. Please go ahead.
Hi, thanks for the opportunity, and thank you so much, sir, for the summary at the start of the call. I think it answered a lot of questions that I had. So two questions. One is, I think around December 2019, March 2020, we have reached about 170 crore sales numbers. So I heard in the middle of the call that was in the minimum number of level of the polymer business. So now we are reaching the optimum level. So do we have a capability to reach 200 crore per quarter? So it's not in the immediate quarter, but subsequent quarters over the next 6 months?
No. As I mentioned that we can reach annually about 700 to 750 crores in terms of and what you probably surmise is not correct. 160 crore is not what is the minimum volume. Minimum volume we were talking about in terms of compensation that was there in the earlier year when the volumes were not taken. It's not about minimum volume is 160 crores or anything. But what I just mentioned is that in total, all products combined, we have the capability to reach about 700 to 750 crores annually, depending on the product mix, the price, and all that.
Got it. And the other question that I had, sir, given we are primarily in acid chloride, there's been a lot of scrutiny in pollution boards to not to give permission for all the red zone products. Right, so acid chloride typically fall under red zone products. Not sure where our products fall in the polymer business. Right, so if you could, is there a difficulty to get some of these permissions even if it's our existing land, given acid chlorides are typically red zone and pollution control boards have a lot of measures not to give permission, because even in Vizag, a lot of pharma plants and chemical plants are being shut down because of this exact same reason, and probably that's why our project also got delayed.
No, just to clarify, you have asked the right question, but it is not that because it is acid chloride and it is red zone product or anything. Products are not defined versus zones. Zones are defined based on the level of pollution that may have been there in that particular region or that particular area. Based on that, red zones are defined. Products can be, of course, products also definition green, orange, red category and all that. But that doesn't create problem in terms of getting new permissions if the area is not defined as red zone. Now, but especially where we are, which is Ekalbara, currently they have certain policy where they don't give permission for expansion even if you have the land. Which, as I mentioned, that we have reason to believe, we have heard from some reliable sources that these permissions are now going to be relaxed. So they should be coming. But we don't have any confirmed or any evidence about it. We don't have any confirmed information, but we have heard. So what we use, as I mentioned, is that what we use is what is called product mix change. So for example, in our permission, we may have 20 products. Out of that, we may be only making right now, say, 15 products. So those 5 products we are not making and we are not planning to make, then we convert those products to what new products we are making. And this is one. Secondly, as I mentioned, our job work partners, they have also similar situations. They have 20 products and they are making only 4 products or 5 products. So other products capacity, which may be significant, can be converted to products that we want to manufacture. So this is the way the growth can happen. But yes, right now, our Ekalvara plant is part of a zone where there are a lot of restrictions in terms of permissions. Not restriction in terms of changing the product, restrictions in terms of adding new products and increasing the quantities. That's where the limitations are.
Thank you. The next question is from the line of Rohit Ohri from Progressive Share Brokers Limited. Please go ahead.
Sir, I have 2 questions. When we say that we have added 2 new acid chlorides, so can you just elaborate what are we talking about? Whether it is the composition, concentration, some change in process, or it's a new grade, or are you looking at some product like CMAC or something?
No. See, there are so many acid chlorides that we can manufacture, and out of that we are making right now probably say 10 acid chlorides as an example. Okay. So then when we say we have added, we actually add 2 specific products. It's not about any grade or anything, 2 specific products. So I'll just give you example. Okay. For example, one product which is called isobutyl chloride, which we were not manufacturing earlier, that we have now introduced as part of our product offering. So these are totally new products. Means new products in the sense they are still acid chloride, but they are totally new products, not any version or any modification of the existing product.
Okay, so these are isomers. Are you trying to say that?
Sorry?
Isomers? Are they isomers of the already existing?
The name is like that, isobutyl chloride. It's not isomers.
Okay. And so second question is, knowing that we are into these complex substitution and replacement reactions, if I can use the word, are you looking at going for further forward integration in these processes, maybe a +1 or +2 to get into acid anhydrides or esters, which are having more demand in the pharma, industrial, or maybe the perfume segments?
Yes, as I mentioned, not just this specific thing, but as I mentioned that we are looking at specialty chemicals as one of the growth portfolio. Definitely we are looking at products which are more than what we are doing in terms of number of steps or chemistry or complexity.
So if I can just squeeze in one more, you are looking at acid anhydrides or are you looking at esters?
That right now I will not be able to
okay, sir.
Give information about because
okay, sir, not an issue, sir.
Competition issues also we need to.
Yes, sir. Yes, I understand that. So, that's okay, sir. Thank you. Thanks a lot.
Thank you very much. I now hand the conference over to Mr. Bimal Mehta for closing comments.
Thank you to all the investors who participated and who raised questions, and we hope that we were able to answer all your questions to your satisfaction. And as I mentioned, as and when there is any major or significant development, you would definitely be ensuring that you all get information well in time. And thank you for joining us in call and participating. Thank you.
Thank you very much. On behalf of Transpek Industry Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.